GE, Lauren mentioned its stock at a 9-year low. It did slash its quarterly dividend to a penny a share. Charlie Gasparino's here in the studio with us. I think it was CNBC that broke that story, right, about the dividend being cut?
I'm not taking your bait. I'm
just saying, I know I saw it somewhere.
I'm not taking your bait.
I saw it somewhere before it came out.
I'm not taking your bait.
Oh, congrats.
I am not.
You were ahead of the game, as usual.
Well, yes. And Fox Business, we first warned about this in May, that they would cut it or totally eliminate it. CNBC then came out and said there were no plans to eliminate it or cut it.
Oh, is that how it works?
And then some reporter named Faber over
was messed up in my head. Carry on. So now they've done it.
And then the company came out and said they're considering it. Yeah. We were right, and now they've done it. Okay, so here's what we know. I mean, the new CEO, Larry Culp, basically from my sources close to the company, they said that he believed this was a pretty easy decision. The reason why is he could just blame it on prior management.
Right.
And it may prevent a bond rating downgrade.
Okay.
Because both Moody's and I think both Moody's and S&P have them on watch essentially for a downgrade. They do have cash flow problems. They do have a lot of debt. Yeah. So this was a pretty easy decision for Culp. Now the question is, can he pull this company out of the muck, or do they have to go back and do the radical restructuring that he had, that has always been in the works of plan, which is a complete breakup of the company and just, NGE as we know it. And that's still a possibility. I
was watching Varney this morning. He had Dennis Gartman on, and he was asking him just about the stock. So it's at like $10 now, $10.23. Yeah. And I don't know whether Dennis will do this today, but he did say, he says, you know what? After they cut the dividend, historically, look at some of these big companies. That's a good time to buy a stock. So he was thinking about it.
Yeah, I mean, listen, the biggest bear on GE is this Tusa guy at J.P. Morgan, I think he has a $9 price target on it. So once it starts getting to 9, you're getting to like valuations that if you broke the company up, you get more than $9 a share. So remember, that's kind of like where people are starting to bet this. I mean, listen, they have a Justice Department investigation now.
That's the accounting issue.
On the accounting, on how because they had another charge that they had to account for. They have an already ongoing SEC investigation. They have lots of debt. They have legacy debt in terms of a pension fund, unfunded liability that is big. This is still a company with a lot of problems. The real question is, why did they cut it just to a penny? Because if you keep it at a penny, then at least you can keep in some mutual funds that have
dividend-paying stocks.
Yeah, that basically mandate that you have to have a dividend to be in the mutual fund. So you prevent some of the forced selling. But this is still a company that's in major problems.
What are the options for the CEO? Is he looking at kind of big picture options? Say, hey, I'm going to break it up, and if I say,
I mean, break it up into different companies,
right?
Its main units into different companies.
So what would that look like? And is that the real thing they're talking about?
No, they've spoken about that. They've looked at it. They've discussed. John Flannery, the former CEO, looked at that. I mean, that would be 3 separate companies. And how much would it be worth is anyone's guess. It might be worth more than $10 a share. Might be worth 11 or 12. So that's one possibility. The other possibility is managing this thing to a point where now that you have cash flow, you can pay down debt, and you can manage the existing businesses, some of which are very good. So I mean that's the way to look at it. But even there, that might be problematic. They have a lot of debt on their balance sheet, and they have that unfunded liability. So this might be a case where a new guy, I mean, this is not a GE guy. This is a guy from outside the company. Flannery was a longtime GE guy. Immelt was. Sure. Before Immelt, you had the great Jack Welch. This is someone different who might look at this differently and say, listen, it's not worth it. We just blow the place up.
Sometimes that outside perspective makes sense.
It's interesting that you don't hear much from Immelt and Jack on this.
Has Jack Welch said anything lately about GE's future?
Very little publicly, a lot privately, blames a lot of it on Immelt, not doing a good job managing the asset that he gave him. Immelt turns around and tells people, well, I was handed a raw deal at the top. I was handed a valuation at the top of the market cycle right before the dot-com bubble. I managed through 9/11. I managed through the financial crisis, and I was left with Jack Welch's legacy. Jack would then come back and say a good manager knows when to sell the legacy. So this is the debate that's going on largely behind the scenes among GE officials, former, past, former GE officials who were in touch with both men. And what's interesting is that I think Jack Welch had 3 guys to pick for his successor, which he would recommend to the board, and they would say yes. It was Bob Nardelli.
That's right.
Jay McInerney.
That's right.
Yeah, and it was Immelt. I think if Jack had his druthers right now, it would probably be McInerney or Nardelli.
Yeah, I'm sure, judging on what you're telling us. Well, keep at it, Charlie. One of these days you'll catch up and be able to break some of this.
I'm not falling for it. I'm not.
But as we know, as you
whenever I get out, they drag me back in.
You have tremendous respect for those who you compete with, as you expressed this.
I just want you to know I'm not going to take the bait.
Wow. We really are living in a new world. He puts his glasses in his pocket. That's the sign.
I'm not taking the bait.